G'day everyone, welcome back to Peach Investing. Today is May the 13th, 2023. This is the US dollar DXY update. I've got the weekly and daily trends, and you can see there the weekly is in a neutral and the daily is broken to the bullish momentum. So if you look at each of these, what we look at is the triple moving average of the price chart, the triple moving average 3, 5 and 60. If that's aligned with the moving average of the CCI 150, 5 and 50, then we give it a bullish signal like it was back here. If they're both bearish, we'll give it a bearish signal, and if they differ from each other, we give it a neutral signal, and it's currently neutral as of end of this week. So that's the weekly chart. On the daily, we look at the same indicator, and you can see there it's broken to the upside as of closing of the end of the week yesterday, and it's broken above this descending diagonal trend line which we had there for some time. It was consolidating in this wedge between that support at 10.050 and this descending diagonal. Now you will notice I've drawn a Fibonacci retracement from that high to that low, and it's come and broken through the 38%. Actually, no, it's rested exactly on the 38% level at 10.233. So the key area we've got to look out for, now it's currently showing a bullish momentum on the daily, but again the weekly is still in an uncertain stage. So we need to see a break above at least the 61% to be more confident about going long, and by then we should possibly see the weekly also break into a more bullish momentum. So that's the daily chart. Now on the hourly or any lower time frame, just as a trading idea, we look at the candle breaking above the fractals. If you want to go long, if the weekly and daily are aligned long, we go long. Or if they're aligned short, we take short positions when the candle breaks below the fractal. In this case, we're preparing to go long when the candles break above the fractals, and it has done so there, and we take small percentage gains. You can see there more clearly it's broken above that diagonal line there, and it may actually approach and rest on this ascending diagonal line as well in the coming hours and days. What I've got up here is a backtest profitability chart. Now you'll notice this is only a long positioning only. I haven't demonstrated the short one, but you just reversed the situation for a short positioning. You can see here during this period when the price was moving to the upside for bullish trades, they're all single entries, and over here we've got the average down approach. So you can see there's a bit of we've entered lots of contracts, and the average down process has hit our drawdown if you were to trade this. Now this backtest doesn't discriminate between the weekly and daily. So what I'm suggesting is only trade in the direction of the weekly and daily when they're aligned. So you can see there during that bearish period, that was the equivalent to this area on the weekly, and that shows you no long trades to be taken. So in other words, you would have avoided taking those long trades, and you would have avoided taking that hit to your profitability. So to understand how to trade this and other trading ideas, reference the links in the description below for my Patreon page. We show weekly stock scans and currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in the next video.